The point of that note back then was we passed peak market uncertainty. And what we were arguing was that was the point when policymakers around the world basically got ahead of the curve, or should we say no longer behind the curve. They've done a huge amount of policy response, both from central banks and governments, to stabilize the situation from a market's perspective. And the market's bounced very strongly from that. I think in terms of looking forward to make more progress from here, because obviously we've had a very large bounce in global equity markets now, it's more about the extent of the macro uncertainty, the economic uncertainty, how quickly we can recover. From myself as a strategist, what we're focusing on now is how bad the earnings damage is going to be, on whether or not we can still create upside from equity markets at this point when we think about how much earnings are likely to get hit this year and where we are on valuations as well. And we do think Europe's up 17% from the lows, the S&P's up over 25% from the lows. We do think we've had a pretty strong recovery already on a market perspective.
From a valuation point, one metric that stuck out to me in your latest research is the valuation discount of cyclicals versus defensives. And this number has narrowed from 26% to 5%, suggesting that now the valuation gap for cyclicals is much, much narrower. So perhaps not as much value in those names as there was in the past. Is it too late for investors to buy into these value cyclical plays given the rally that we've seen?
Not necessarily. It's quite a tricky message from the cyclicals, because there's we have a very bifurcated market in general between, let's call it, there's tech stocks and the quality stocks people want to own, and then sort of the cyclical value names like banks and autos that for many years now people have not wanted to own. When we look just within the cyclical universe, we also get quite a severe bifurcation. So sectors like European capital goods look very expensive to us, but mining and autos look cheap. So again, within the cyclical space, we would argue there are some sectors where valuations suggest there's already quite a lot of good news priced in. And then there are other sectors like mining and autos where you would say the extent of good news priced in is pretty low. So in the note we published last week, we actually think from an investor perspective, it's probably most interesting to look for sort of single stocks or subsectors where things are down there. So in aggregate, to your point, there doesn't look like lots of upside. Cyclicals have bounced very hard over the course of the last 3 weeks or so. But when you drill down within that universe, we do still think you can find subsectors and the like where valuations look quite attractive.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.